right. So I'll just start then, I guess. All right, here we go. Hello and welcome back to the Short Vol Show Live. My name is David Lincoln, and I have a special guest here today who I've been trying to get on for a long time, VIX expert and spread trader extraordinaire, Michael Listman. Michael, thanks for coming on.
Hey, no problem, David. Thanks for having me.
I know you've been super busy traveling all over the place around the country for work. And I tried to get you like last year, but you were all over the place. What is it you do that makes you travel all over the country?
We do a lot of IT work, structured cabling. I've got a crew that rolls out and basically installs tons and tons of category network cable, fiber optics, and that kind of stuff.
Oh, wow. And that brings you all over the country, huh? Do you set up like individual stores or something like that, or?
Yeah, usually larger stores. I guess they range anywhere from 15,000 square feet and up. So like think of something like the size of a Harbor Freight, and then up to we've done hospitals that are over 100,000 square feet.
Wow. I worked briefly in construction, and we were doing this. We were doing these department stores where they'd spend like 6 weeks on a store to like redo the whole store, and we were working overnight. So I know that stuff is definitely hard work and pretty grueling. I was more on like the chop and the hammer angle of it, but it must be hard always being away from home like that.
It's all right. We're used to it. We get lots of breaks. I'm kind of on a break right now.
Oh, nice. Well, let's see. I found you about, what was it, a year and a half, 2 years ago on Twitter, putting up trade ideas in the VIX. How did you get involved with Twitter?
Well, I've been trading UVXY for a while before I started on Twitter, and then I guess just looking to see how other people traded it, I stumbled upon Twitter, and I guess initially I would just respond to people and ask them questions and maybe refute their assertions. And then after a while, I just started sharing my trades, and it just kept going from there.
It's really interesting how fragmented the social media world is. There are some people that are like only on Twitter. There are some people that are like only on Facebook. There's some people that are I mean, there's all these little spots that you can go and check out stuff, and it can be really confusing, it seems, at times. But yeah, I found you on Twitter, and what attracted me most of all at first was just the spreads that you were doing in I guess it was UVXY coming into that Volmageddon. Now,
Yes.
what got you focused on the VIX in particular for a trading vehicle?
Well, I had traded a long time ago, I guess in the late 80s. I actually traded options back then, like OEX 100 options when they first came out. And I'd been out of it for a long time. I'd owned some Radio Shack storefronts. I owned a couple of those, and I knew they were going down. And I thought, this is a good shorting opportunity because I know that they're going to go out of business. So I threw some money at it and shorted Radio Shack, and sure enough, they went belly up. Stock was worth zero. But after that, I was looking for other trade ideas. I went to the Cboe site, and they actually have a tool there that lets you do an option search of what's got the highest extrinsic value, highest premiums. And UVXY was always showing up as having the highest value that you could profit off of every week, or you could scale this search tool however you wanted. So that made me look into it, and I started trading it, and of course got burned multiple times till I figured it out. But yeah, ever since then, that was probably early 2015, and have been doing it ever since.
Wow. Well, I mean, I started probably about 2 years ago, and there's been kind of like, I guess you could say, a couple little sections of time. There was that period in 2017 up until the quote-unquote Volmageddon. Then there was the period after that, which was kind of craziness, and then there was the kind of a new period sort of starting out now. Is what did I miss before 2017? Because that's kind of when I started. It was 2017. Was it similar to that back then? Was it pretty calm in 2015, 2016?
Well, no, 2015, you had the China currency issue in July, and then it blew up in August, August or September of that year, and that was actually the biggest UVXY spike in its history. That was a 350% spike from trough to peak. But after that, yes, it calmed down, and it was basically straight down for, through the end of 2017.
Yeah, the Volmageddon thing was definitely a wake up call for me, and it seemed like when I first started in there in 2017. It seemed like such a sort of a layup trade. I kind of walked in right when people were making a lot of money, and I first came on to StockTwits, and everybody seemed to be shorting the UVXY and the VIX, and I was a trader for a really long time before I did that, so I wasn't like deceived into thinking like, wow, this is just easy and it's free money, because I know there's no such thing as free money in the market.
Of course.
But and it did actually come to fruition with the Volmageddon. How did you adjust? I know I adjusted after the Volmageddon. I did not. I stopped selling naked calls for one thing, and I just kept things a lot tighter, of course. How did your strategy sort of adjust after the Volmageddon, and what was your impression of that whole little period?
Well, that was kind of a unique event. As you know, it was more of a liquidity squeeze specifically for the futures contracts, which all these ETFs use as their daily holdings to maintain their value. And when they couldn't do their daily rebalancing, it just got out of control. So it wasn't really a market event, although the market was kind of a contributor. If you remember, Trump had just swapped Fed chairs then, and that is always a bad sign for the market, at least short term. But yeah, it cracked, and it was tough on a lot of people. Fortunately, I had a portfolio margin account, and you can basically slap on all the trades that you want, get yourself delta neutral. So I was able to go long UVXY during that period, which I almost never do. But if I wasn't able to do that, yeah, I would have been wiped out.
Yeah, I can't say I fared incredibly well either, but fortunately I lived to trade another day, which I guess is the key.
Yes.
Definitely. And I got sort of lucky in that I sort of panicked and covered my short calls like about 20 minutes before it really spiked hard, and so that kind of saved me in a way on that particular moment. But let me back up for a second. For people that maybe are learning, just starting to learn about the VIX and UVXY, could you kind of just describe, if you were like explaining to someone who knew nothing about this stuff, what the actual kind of trade is in UVXY and what kind of the strategy is?
Well, essentially, volatility is just an insurance policy that most portfolio holders use to protect their portfolios. And insurance costs money, and as an insurance salesman, you collect that money until they make a claim. So market tanks, somebody says, hey, I've got this insurance policy, now you pay. If there's no crash, then you just keep collecting premium in whatever way you want to short the market or short volatility. There's as many different ways to do it as there are traders. So there's no one right way or wrong way. There's riskier ways, there's safer ways, but it is complicated. Most people, they're used to looking at equity. I'm looking at Apple, and I buy some Apple shares, it goes up. I know how that works. But when you start looking at something that goes down, something that reverts to the mean, something that there is constant pressure on it with futures contracts. It can be very complicated.
Yes, indeed. I was shaking. You can't really tell in the audio, but I was shaking my head in agreement with the insurance analogy, because that explains so much about this, and it also kind of explains in a way why there is sort of lag in these things. If you just think of it as someone selling somebody else an insurance policy, then the person gets paid a little bit of money over time if the hurricane doesn't come in or whatever. If your
Right.
car doesn't get smashed into, you collect a premium over time, and that's sort of the way the term structure works. So I think that's a great analogy for that. So what are your main products for trading volatility?
It's almost exclusively UVXY. When they nerfed it last year, it was a little disappointing. But there are no options on TVIX, so UVXY is going to be my underlying of choice.
Yeah, I go on this show sometimes called Volatility Views, and they consistently give me a hard time for focusing on UVXY, because I think they do these sort of arbs from between the VIX options on VIX futures and the SPX puts and whatnot. But I've always, like you, been ultra focused on UVXY, and yeah, it was more interesting when it was 2 times leverage. But it's still interesting now with 1.5 times. I kind of wish TVIX had options on it so that we could play that one.
Right, or just restore UVXY to 2x, but
Yeah,
I was
exactly.
reading through their prospectus, and they've completely updated it since the Volmageddon. So I don't think they're going to switch back.
I noticed that you seem to post a lot of uh, put spreads, put verticals, or selling call spreads. Is that one of your main strategies for you personally to sell call spreads or buy put spreads in UVXY?
For Reg T accounts or IRAs where you can't basically sell naked positions, yes, it's defined risk. Uh, works works beautifully if you give it enough time, enough duration, and uh, I've been this year. I haven't had a single losing trade. There was only a couple losing trades after the Volmageddon last year.
Mm-hmm.
Uh, but the downside for the spreads is that if you do get underwater, there's no way you can manage that. You can't roll it. You can't do anything with it. You basically just have to eat the loss.
Mm-hmm.
And with the strategy that I ran for basically 2 years up into the Volmageddon, it basically took a 50% spike in UVXY to give me a losing week.
Mm-hmm. Yeah, it's I know that people had talked a lot with when XIV existed about sort of how to take your money off the table from that, and I have been talking with a trader who has sort of similar strategies to yours, who basically sells weekly out of the money calls every week, and thus is able to take the money off the table quickly in that way. Do you? What's maybe the average duration of your trades in UVXY? Would you say?
Well, in my portfolio margin account, they're weekly. I'm basically doing the same thing.
Okay.
I'm selling calls. Actually, I'm selling in the money calls
Okay.
every week. So they'll be just inside the money. Like for instance, right now we're at about 23.50. So next week, I'll there's no 22.5 strike next week. So I'll have to sell either the 22 or the 23s or a combination of the two uh, to get about where I think it's going to be or should be on average.
Yeah, that makes sense to me. Um, yeah, I've thought about sort of longer term type trade, like looking out to maybe December or something and going farther down the strikes to like I don't know, the 2015 spread, something like that. or a similar spread in VXX. And it seems like a lot of times when I put a trade on UVXY, when everything seems to be lined up perfectly, all of a sudden it spikes. Do you sort of have just a mechanical way of doing things, or do you try to kind of time stuff a little bit?
Well, after every loss, even if it was a 50% spike that took away 1 week's worth of trades, I'd always reevaluate, see what I can do to improve it, see what mistake I might have made mechanically. But through back testing, I've basically come up with average occurrences. So once a month, it's going to spike 10% or more. Once every 2 months, it's going to spike 25% a month. 2 times a year, it's going to spike 50%. And once every year and a half, it's going to spike over 100%.
Mm-hmm.
And, it's not clockwork. It's not going to be, reliable like that, but it's the law of averages. It's going to happen. So I've gone to a spike only entries for the spreads. So I'll wait for a 10% spike at least before I open new spreads. I just missed one. It was last week. It had spiked. I think I needed 27.44 was a 10% number, and it got to like 27.30, so I didn't pull the trigger. But now $4 less. We're like, why didn't I do that? I should have, but you don't know.
Yeah, it's tough. But I've definitely sort of evolved to, like, if I don't have a position on right now, I will wait till we get a pop, because the one thing we do know about the VIX itself, as opposed to the VIX ETPs, is it is going to oscillate up and down, and it is going to go back up at some point.
Yes, though it's very hard to profit on the upside as opposed to on the downside.
Yeah, definitely. I've certainly found that as well. Yeah. So, when you were younger, were you interested in the financial markets from a really young age, or was it something that you got into later in life?
Well, I was always a capitalist as a kid, so always having the lemonade stand or selling vegetables on the street corner. But no, yeah, I was, just out of high school, I was going down to my broker, and I remember my first trade was buying silver, and wrote a nice little spike from like $17 to $25 or something like that, and he was impressed with me.
Nice.
But like I said, on and off throughout the years, I've done various things: options, stocks, futures, just about everything.
Well, that's interesting that you were trading in the OEX, because, my background is from the Cboe, and I knew a bunch of people that were in that OEX pit when that was like the center of the universe.
Yes.
Back in the sort of late 80s, I would say, mid to late 80s. And that was a exciting period for that spot. I kind of got to the Cboe a little bit later. That was kind of, the OEX was turning more into like the SPX and the NDX by the time I got there. But yeah, that was an interesting spot, definitely. I just find it amazing that you took the initiative to go out and learn all this stuff by yourself, because a lot of the people who I come across who trade the VIX are like, came out of some sort of trading firm or something like that. It's interesting that you kind of latched onto this independent of anyone else.
Right. Yeah. No, I've never had a financial services job, so.
Yeah, I think that's really cool. So, how much money would you need to sort of employ some of your strategies? Does it take a lot of money to trade the VIX?
Well, if you're just doing the spreads, it would be whatever the broker minimum is to do that, and I think most are probably about 2,500 before you can start doing spreads.
Mm-hmm.
But to do like my naked call selling, you really need a portfolio margin account, and that's going to start typically at 125,000 for one of those accounts.
Do you ever trade the underlying in UVXY against your spreads or your account?
Like I said, I did for Volmageddon.
Mm-hmm.
I had done it a couple times before. My actual first trade was a covered call, so I was always long the stock and just trying to make it up by selling calls against it. But I quickly learned that the premium there will not keep up with the decay, so I avoid going long at all costs.
How do you explain? Can you kind of just describe? How does it work that a leveraged fund, like a 2 times leveraged fund or 1.5 times leveraged fund, decays beyond like the effects of contango and stuff? We kind of try to describe it online in a way. It's kind of called it like beta drift or something like that. But can you sort of talk about maybe how we calculate that by maybe looking at, like, I don't know, it's SP Vixter, that sort of thing, how we can figure out how much beta drift? Because some of your most interesting tweets for me have been kind of your analysis of how much UVXY was decaying over time.
Right. Well, the problem is that's a moving target. If UVXY has had a little rise, the beta slippage is going to look very understated. Whereas right now, if you compared it, it would look massive. And it's a like I said, moving target. But to explain it, I guess the easiest way is that it's kind of a compounding function. So the underlying that it tracks, and that's SPVXSP, that's an index that Barclays publishes, and it's the benchmark for UVXY and SVXY. As that moves, they tag UVXY's value to a multiplier of that. So at the end of the day, they rebalance the fund, in UVXY's case, 1.5 times that, and they move around their holdings to create that much exposure at the end of the day. And I guess the easiest way to think about how it loses value is when it goes down farther. So the next day, let's say it goes up 5%, UVXY goes up 5.5%, but it's starting at a lower point. So even though it goes up 5.5%, it's less than 5.5%. And they try to explain it in the prospectus, and they call it a compounding. And it works both when UVXY goes up or down. You're going to have this drag on it, and it's really because of the lowering of the price and getting a expansion from a lowered standpoint. You're always going to be less.
Yeah, I sort of think of it in my head, and maybe this is the wrong way to think of it, but I sort of think of it as like if you have like a 2-time leveraged fund, when it's going up, you get slightly less than 2 times, and when it's going down, you get slightly more than 2 times. Now, exactly how that happens, and I guess it kind of varies. Like there is a path it can take where it would not decay as much. It kind of just depends from day to day on where the closes are, how it rebalances. Is that right?
Well, it's strictly a function of the volatility. If it's only moving 0.5% a day, the beta slippage is going to be minimal. If it's moving 5% a day, then the beta slippage is going to be much greater. I've always, I think that I call this a beautiful underlying, because if you look at the long-term chart, it's just basically straight down. And then I've looked for other underlyings that can kind of come close to this, and the only thing that I found are going to be some of the gold miners, Dust and Nugget, and those are 3x ETFs, and they also, as a pair, they both go down, and they're much more volatile than UVXY on a percentage basis, and that's why they both go down, even though they're inverse of each other.
Yeah, that's actually how I found UVXY myself. Was I became interested in this idea of these leveraged ETPs, and I was like, well, and I got into it through natural gas ones, NGAS, and I was saying, well, what if I just, sell both of them won't I make money? And there were I read a bunch of papers saying, well, you can do that, but it's tricky to rebalance them the right way. And as I sort of researched how I might go about this, maybe selling out of the money calls in both of them or something, I stumbled upon UVXY that seemed to have better premiums than any of these ones at the time, and that's kind of how my path was to UVXY and this slippage. It also, I learned about how the term structure is sort of unique as compared with one from, say, oil or another commodity, in that there's no sort of specific arbitrage, so that the futures sort of float around more than they do in other commodities or indices. So
Right.
it's kind of how I got to UVXY and the VIX. So do you think we're coming back into another period of like are we going to look back on the summer and say, the golden days were back again? Because it kind of seems like it's setting up that way. It seems like, average contango has been pressing up towards 10%,
Well, I mean, it is summertime, and it's typically there's less volume, less volatility, and this was bound to happen, and it's a seasonal period that this is typical.
Mm-hmm.
However, as we get into August and September, that's going to change. Last year, I was waiting for it. I was waiting for an entry, waiting for an entry, and we never got a spike. It wasn't until September was over and we got into October that, again, that was a Fed chair trigger that happened last year, and kept getting worse through December until another Fed chair event, and he flipped positions, and that righted the ship. But there's no way to predict this. You just have to have mechanics. You have to have a strategy. You need to test it. There's going to be spikes. You can't avoid that. There's going to be periods of low volatility where the ETFs get crushed. I don't have any advice for somebody who's trying to time the market.
How do you were talking about back testing your strategies a little while ago. How does someone go about back testing something?
I know there are lots of tools, but usually I just do everything in Excel. I'll pull down the data set that I want. You could just go to ProShare's site and just download the daily numbers for UVXY and just crunch the numbers however works for you. If you're not comfortable with math, it's probably not going to be something that you can do. But I'll look for different things. I'll come up with an idea. Say, hey, what about this? Like, how many times does it spike 50% a year, or how often does it do this, or how much does it decay? One of the things I originally tracked was a decay rate, and if you look at the curve from UVXY over the last 7 years or 8 years, it looks pretty smooth. Now it's a logarithmic decay, but I was always trying to compute the floor. So UVXY is not going to go lower than this over a given time, and I tried to use that as targeting for my positions that I'd opened, but that it became more apparent to me that wasn't a very reliable method of predicting future price.
Yeah, I think we all try to do that in one way or another. We want to know where it's going to be in 6 months, most likely, and we want to set our targets like within a comfortable range that it should definitely reach that spot.
Right.
And one of the ways I do that is I will just simply take the contango percentage and multiply that by the underlying. Do you think that's a fair way to kind of just do a broad? Like if contango is 10% and the underlying is $30, if you multiply those two and get some monthly figure of it's going to move $3 a month, and you put your target within $2 a month, 10 months out or something, is that just too shorthand of a way of looking at things?
In my opinion, yes, that would be, because the most important thing is going to be the distance between the proper ratio of M1 and M2 and the spot price. Now, M1 and M2 are going to be, one's going to be less than 30 days, one's going to be more than 30 days, and they're put together in a combination that equals 30 days over the spot price. And right now, that distance is pretty high. It's between $2 and $3, which is huge. And if you take that number, whatever that difference is, let's say it's $2 over 15, you can just basically take 2 divided by 15. That's 13% of decay over 30 days. That's kind of teed up.
Yeah.
You could then multiply that by 1.5. You've got that's a 20% drop in UVXY, which is going to be 470 from here, which would drop you down to $19 in a month.
Yeah, I always.
So that would be.
I'm sorry. Continue.
Yeah, that would what I would look for in a low target for UVXY in 30 days. Now, that's also given that VIX stays exactly where it is, which we all know isn't going to happen. But
right. Yeah, and I always see that area between, if you were to look at the term structure chart, that area between where the futures are and the spot is as the sort of the potential for I guess edge to the downside or potential for this to drop. Yeah, and the obviously the wider that is, the more potential you have for this to go. What about like if you come up with a number of like, let's say 18 in UVXY in the next month, what about selling like the 16 puts? Is that anything you would do if we're in the basement of UVXY and stuff? Would you consider getting long by selling out of the money puts ever?
No.
Okay.
And there's the reason for that is there's just no premium. If you look at 30 days out, we'll say August 23rd, the 18.5 puts are going for 16 cents. There's just no incentive to take that risk on for 16 cents.
Right.
Because if VIX stays here, we get down to 18. If VIX drops even further, then that 18's off the table, and then you're looking at 17 or 16, and then you're really in trouble.
Yeah, I learned that the hard way, and I wasn't selling like the front month puts. I was selling a couple months out puts, but I got run over a couple times just because vol came in more than expected. And it just comes down to that downward drag is really hard to avoid, and you just don't want to get in the way of it. It seems.
Right. I mean, unless you see an event coming, or you're sure that there's going to be a spike, then jump on. But otherwise, that's not enough premium for the risk that you're going to be taking on.
Do you follow any other sort of indicators to kind of guide you? Like, do you have like a watch list that you look at, maybe like the SPX, VVIX, gold, bonds, any of that sort of thing? Do you follow the sort of the broad market as well?
I've got ES futures up on my chart, crude oil,
Nice.
and of course VIX, VIX futures. I do have VVIX up there.
And I like to, a lot of times when I talk to people, we start talking about the VIX and stuff, and I feel like some viewers, and I know this happened during the Volmageddon, some viewers will take some strategy they heard here and put all their money in it, thinking that it's a great strategy, so why not put all my money in it? And so I like to ask people that come on, what do you have different different strategies for like your long-term savings, like your savings for, I don't know, quote unquote retirement or later on in life? Does everything you do financially have some connection to the VIX, or do you have a separate strategy for your like sort of long-term safety net?
Well, there's real estate holdings, but that wouldn't be market focused. No, I don't have any other market strategies. Well, in some of the IRAs, I'm basically shorting some of the 3X ETFs, just riding them down, SDS, QID, LABD.
Oh, that's interesting.
Some of those, um, like I loaded into one, I think about this time last year, I think QID, and those are up 50% in a year,
Hmm.
just going along the puts.
Hmm.
And those I wait for spike entry. So like if the market pulled back, uh, I would add more to those positions. And then if I think it's at a bottom, like now, I would sell some calls against that, or not calls. I would sell some near term puts,
Hmm.
make a calendar out of it.
Yeah, I think real estate definitely counts.
Okay.
Certainly does count. Do you are you a political person? Do you spend a lot of time thinking about politics and the elections coming up and that sort of thing?
Uh, Unfortunately, although I know that what I think or say doesn't matter to anyone or in politics at all. So
Mm. Yeah,
yeah.
I think it's a obsession with a lot of people, and I found like the older we get, the more people seem to focus on politics.
Although I do have a different viewpoint, though. Uh, I served on a public board locally here, and just a small management board. And we had a public meeting, and someone came in and accused us of all kinds of nefarious stuff. We were this dark, secretive government entity
Oh,
doing
wow.
all kinds of pulling strings behind the curtain. And we're volunteers. We're not paid. We've got no financial uh, skin in the game. We're just trying to do our best with the entity we're in charge of managing. And it just made me realize that most politicians really mean well. They're just trying to do the best they can, and lots of it gets misinterpreted. That's not saying that there's no hanky panky or uh, self dealing, but by and large, I think most politicians have people's best interests on both sides.
Yeah, it's interesting you're saying that because I was just talking actually with my best buddy about we were just talking about the election politics and stuff and like how could we affect this situation positively, and the answer is public service. So I commend you for getting involved, and if each of us can kind of contribute our helping out in our own way, whether it's running for a board or being on my father's on a planning board for a town, getting involved and helping out in our own positive way is I think the best way to affect this system, which has become so polarized and sort of tribal.
Right.
It seems like um, and but I always try to like bring out a little bit of politics from people because I know the market becomes focused on that at times, and it certainly becomes focused on interest rates. Do you trade any regular stocks ever, like earnings plays or things like that?
From time to time, I will. If if volatility is not doing anything, and I've got a bunch of cash on the sideline, I'll look into it. But they're 50-50 shots.
Mm-hmm.
I've tried to find different strategies where uh, it improved my odds, but of course, you're reducing your risk, you're reducing your return. Um, so I will from time to time, but it's not a regular habit.
Yeah, I think it's a good thing in the financial world to like focus in on something that you feel really focus in on something specific. And I'm sort of talking to the audience here that you can latch onto, and then there's no need to be like a jack of 50 different trades. It's like you focusing on something that you feel like you can understand and stay focused on that. And I certainly have latched onto UVXY kind of like you have, and there is kind of a little community of people out there that are trading UVXY that we all sort of kind of know each other in a way. What are some names that you follow people on Twitter and other social media to do with the trading world? What are some names of people you follow if you do follow people?
Well, I track Seth Golden and Vance. although Vance doesn't post any trades.
Yeah.
But he does have lots of great detailed information uh, posted on six-figure investing.
Yeah.
I don't. I'm not going to say that I follow many people, but I try to maintain my market awareness and just see what other people are up to.
Yeah. Well, I definitely appreciate all your contributions to that Facebook group. You definitely like step in and teach people stuff. I feel like sometimes like there's a lot of people there that want to learn stuff, but there isn't. I'm trying to figure out how to like stimulate that group to be more active, because I know there's a ton of people on there just from the membership request questionnaires that want to learn stuff, and it's like, so I
Right.
appreciate you jumping in and helping people out there with that.
Well, and it's also, I mean, it's good for me because people ask me challenging questions and say, well, no, it doesn't work like that, or doesn't it work like this, and how about this, and how about that? So it's all these other people that question me that get me looking into different strategies and back testing different things, and uh, I would say it's probably helped me more than I've helped them.
Yeah, I found a trader who was trading UVXY, and he was selling. He was like a very risk-on type trader, and was selling basically like fat calls all the time, and made a fortune trading UVXY in the last couple of years. And he had sort of been isolated from people, and so I feel like getting kind of a group of people together, it helps everybody out a little bit, because it well, for me, it makes me keep honest with myself in a way. And what about the strategy of like always being short TVIX, like shorting a little bit of TVIX and just leaving it short, and that's your strategy, and forget about it?
Well, and that works. That's great. That's pretty much what Seth does. You need to leave yourself plenty of liquidity
Mm-hmm.
to suffer, a 3.5 or maybe a 5x spike. There's carrying costs with that. Uh, there's if if it's margins, you've got margin costs. So it's expensive, but it works.
Yeah.
The ultimate way to short is by selling at the money or just in the money calls. That was always the holy grail based on uh, option structures, and I just keep looking for a way to do that and mitigate the risks.
Yeah, because you collect the premium on top of everything else, the option premium on
Right.
top of everything else.
And if you do it on a weekly basis, you've got the largest gamma uh, theta decay just on that last week.
Yeah.
It's really the way to go. But and if there is a spike, you're underwater, you can just keep rolling, collecting more premium with every roll.
Yeah. And just roll it out if it
Yeah,
happens.
you still need the liquidity or some kind of protection. You can sell, and the one thing I've been doing is selling deep in the money puts against that. So every dollar that the call loses, I gain back on the put.
Oh,
Um,
that's interesting. Yeah, it seems I know that it's happened to Seth, and it's happened to all of us to some extent, that there's been a sort of big amount of resistance from sort of the old school quote unquote trading community towards uh, people who are shorting UVXY and the VIX, and a lot of people, they just can't seem to get past. Well, the VIX is at a lower average than or it's lower than its average price, so it's foolhardy to sell UVXY. And I've seen I've even seen you get people want to talk smack about shorting the VIX. Why do you think that is?
well, every trader is different. Everybody creates their own biases. They have their own experience. I can give the same strategy to 10 different traders, and every single one's going to implement it differently. Even if I lay out the mechanics and say, okay, you need to do X, Y, Z, they're all going to tweak it a little bit. They're all going to see an event on the horizon and think, well, maybe not, or hey, let's double down. So it's really an individual thing.
Mhm.
I don't think there's a gross misunderstanding. But
And when stuff spikes and we go into backwardation, with the front futures being higher than the other ones, how do you adjust your strategy for a spike? Just sort of in general terms, do you just continue to do the same thing, or will you become more aggressive when there's a spike, or do you kind of wait for a signal that the spike's sort of over? How would you handle it if we were to spike 50% right now?
well, right now I've got a lot of cash waiting for a spike, so I'd be all over it.
Okay.
But then there's also a chance that that 50% spike turns into a 100 or 200% spike. So you always have to be mindful of that. It really depends on your positioning. If you're all in on a 10% spike and you don't have any more firepower left for a higher spike, then you just got to ride it out.
Yeah, I mean, I guess the answer is to always have bullets, and that's interesting that you have cash on the side for that, and I as well have cash on the side for that now. I think, the lesson for Volmageddon for me was to get smaller and have cash on the side.
Right, but then your total return on capital gets reduced if you don't put your money to work.
Right, it's a balancing act.
Yeah.
Definitely. All right, well, I really appreciate you coming on. I hope this is cleared up, or actually just describe the process a little bit better for some people that may be new to this. And I really appreciate you coming by. I wanted to ask you, we were talking about, you were mentioning maybe we could do something with a green screen sometime or something. What would you have in mind like that? Like,
well, I mean, I don't have a studio here or a nice background. I mean, like everybody that you see interviewed on TV, CNBC or something, I mean, they always have a backdrop of something, so you could do that with your guests. I mean, I think I've seen you do it behind yourself.
Yeah.
But you could also do that with your guests that come on.
Cool, because I want to pick your brain sometime on TV production tips, because I know that you're really skilled in that area, and I'm just an amateur. So hopefully you'll have enough time, and we can find a spot to do that at some point in the future, because that sounds like it would be a lot of fun.
Okay. Yeah.
All right. Well, listen. Thanks so much for coming and speaking with me, and I just want to thank you in person for all your great trade ideas, because you've certainly made me some money with your spread ideas, and I know that counts for a lot of other people too. So keep posting that great stuff, and thanks so much for doing it. I appreciate you helping out the other guys a little bit.
All right, we'll do. I'll always ready to help other people.
Yeah, you're certainly an inspiration. So thanks so much for that. And thanks everybody for watching today, or listening actually today to this broadcast. And it's a long time in the making. And best of luck to you in the rest of the summer here trading UVXY.
All right, thank you. You too.
All right, I will. I'll stay in touch with me, and maybe we can do this again sometime.
All right, sounds good.
All right, thanks, folks, to you for watching, and we will see you next time on the Short Vol Show Live.
See them making.
All right, there we go. I mean, I've never been I started as a delta neutral market maker, so I've never been a technical analysis guy. And I mean, when you're several levels removed from like actual supply and demand, it's not meaningful.
Right.
And you would kind of have to put it on sideways axis or something. There's nothing in the chart that accounts for the futures and their relationship to one another.
Right. And the other thing is I've got all kinds of problems with technical analysis. One is, if you're using candlesticks, what's the time period? If you change from a 1 minute candle to a 5 minute candle, does that change your analysis?
And a lot of times it totally does.
Yeah. If you change from a 50-day to a 100-day moving average or a 76-day moving average, what does that do to your chart? And these are all just kind of subjective, just throwing stuff up to see what sticks and then trying to make sense of nothing, really.
My theory with traders who are very successful and they point to technical analysis is they're actually doing something else that's making them successful, and it's kind of it's something they're doing. We all look at charts. You and I know what a UVXY chart looks like. You need to know the charts of your products, but I think they're doing something else that makes them unique as a trader beyond just looking at that chart, and they're kind of like saying it's the chart, but it's not really. That's my theory on people that are technicians that point to the charts for their success. But
right.
Who knows? Who knows?
I mean, I just rely on the probabilities.
Yeah.
It's going to spike 10% once a month, or 12 times a year on average, and I can just pace my trading based on that. And then the 25% spikes and the 50% spikes, and so on. But as to being able to say, oh well, it's low. I have people just message me and argue me. Every time the VIX gets down to under 12, or under 13, I go long.
Or even worse, every time UVXY gets to 20, I'm all in. And it's like
right.
UVXY is it's made up of different things. The futures that it was made up of 2 months ago are gone. And they're never coming back, And I don't know. It is funny. There's a lot of misconception about it, but the thing with trading is that the reason we're able to make money is partially due to that misconception by people.
Well, I mean, there's still plenty of money, even if everybody's doing the same thing.
Right.
I've worried about, okay, so my latest trade is this, selling the calls and buying the protective puts, or selling the protective puts. And I'm thinking, okay, if I do that, because there's no activity for a 90 strike put in January.
Mm-hmm.
If I start, suddenly there's 2,000 shares or 2,000 contracts worth of activity, what am I going to do to the market? And I've made friends with some very wealthy traders, and they're like, the more people you have there trading, even if they're all trading the same thing, is good. That's liquidity, that's market activity. It can only be good.
Yeah, I agree with that too. I mean, it's the participants in the market are what make the market, and yeah, totally. And there is always going to be a need for insurance by big portfolio managers. As long as people are buying puts in the SPX against these big portfolios, there's going to be another side to our trade.
Oh yeah.
And that activity is way bigger than ours, and I think it's even more so now. I think UVXY is like way down in volume from what it was, before the Vomageddon, as far as the short side.
It is, and I saw somebody comparing it to TVIX, and saying TVIX has twice the volume, and well, yeah, but it's also half the price. So on a dollar weighting, they're almost the same.
Yeah, good point. Good point. Well, when you have an ETF that's got both sides, where there's two ETFs, the long and the short side, then they hedge each other. So there's always looking at that calculation, like how much is UVXY, how much is XVXY, and do the math on that too to see how where stuff is. That's a conversation for another day, and those big guys upstairs too. Cool. Well, listen.
Yeah,
Go ahead.
I don't understand the people chasing SVXY, because, I mean, the beta slippage is working against you with that. I think it's just the mindset of buying something that's going to increase in value, and they can't just wrap their head around getting on the other side of the trade.
People have a hard time wrapping themselves around shorting something. They're like, it's un-American. Something like that. I don't know. I remember we had Mexican people outside the Cboe protesting that the peso had been devalued. As if and we're like, first of all, we don't trade currencies here, and second of all, it's not our fault as a market maker if something goes down. But
right.
People don't totally understand.
Talk to your
president. Yeah, talk to the president. Exactly. Send your information to the president. All right, cool. Well, thanks again for coming on, and I will see you around.
All right, thanks a lot.
All right, talk to you soon.